Hello, everyone, and welcome back to another monthly market update with myself, Kyle Kerr of Initium Real Estate. It's great to have you back here again. And we are June 15th as of recording this video. So as I'm going to touch base quickly on the end of May sales and kind of just discuss some of the other market trends and everything else that we're seeing out there. So as always, I always like to start with the real estate board update that was put out on June 1st. So some of you may have already seen some of these sales updates and everything else. Some of the main things to highlight: we had a total of 713 properties sold, and although that was about 10, almost 11% higher than the amount of sales we had in April, which is pretty typical as the spring market ramps up, we were still about 6% lower than sales that we had in May of last year. So again, we've had a typical spring market where sales have ramped up as we've gotten further into the spring, but we're still, we're seeing a month where we're back below where the sales were last year. Chair Kine talks about kind of what we're seeing, and that's really listings. And a lot of my market update today is going to talk about the active amount of listings that we have, how that compares to the last 5 years, and how that's coming into an effect when we talk about those kind of market conditions on the ground. We did get over 4,000 active listings at the end of May, and we're a little bit higher than that now into the middle of June. And so that's an 8.5% increase from where we were last year when there was about 3,700 active listings. So again, buyers have more choice. As we've said, there are still rare cases where we are seeing multiple offers and things selling above asking price, but that is in those micro market, those micro categories, potentially a specific neighborhood or street where properties don't come up very often, and those properties are well priced. But overall, there is a lot more active listing inventory right now, and that is what's causing buyers to take their time. And again, if your property isn't priced properly, if it isn't staged and ready to go, you may experience a longer time on market or may not realize a sale at all. So it's really important to understand that even though we are seeing an increase of sales, it doesn't mean that prices are jumping up astronomically. And it also doesn't mean that your specific home is going to get a lot of attention just because sales are trickling up. Again, he talks about that in his update here as well. Prices on the single family home side increased about 0.3%. Condos were down about 2%. And so again, every micro market, every category is functioning a little bit differently. And so again, you really need to understand where you are. And although our spring market has been steady, there are a lot of sellers who are sitting there waiting for their buyer to come along and hoping that, someone may come and pay them the price that they're currently at. But as I've said before, if you're on the market and you've been on for 2, 3, 4 months, you're not going to realize the sale price that you're hoping for. And so you need to make that decision of, can you sell it at a lower price, or does it make sense to potentially take it off the market and wait? But again, by waiting, looking at the national economy, looking at the international economy, it's not guaranteed that a year from now we're going to be in a better position. And so there's so many different factors that go into your specific situation. So if you have any questions on your situation, would always love to chat with you about that. Quickly looking at the home price index sales, single family homes, we're still in this kind of relatively up and down market with prices up, maybe between 1 or 2% or down 1 or 2% on the single family home side. Even an area like Oak Bay that had been performing really well to start the year, we've even seen that they had a little bit of a negative decrease over the last month. So always hard to put a specific, thumbprint on why that's happening. But again, just understand that prices are relatively stable, but it doesn't mean that you can overprice your property as you move things forward. Looking at the townhouse segment, which has been a very popular segment, and sales are up quite a bit in the townhouse segment. We've talked about the missing middle quite a bit. But even there are price fluctuations in different neighborhoods. So again, you have to be very sharp with your listing strategy when you go to market. And looking at the condo market, we did see some strength in the condo market to begin the year, but over the last couple months, we are seeing a little bit of negative trends again. And so again, it's, condos, there's a lot of supply, which I'm going to touch on here in a minute. And so again, we're still dealing with a few new developments that are coming forward. There's developers in town that I know that have 60, 70, over 100 units of unsold inventory. And I touched on that with what's happening in Vancouver, where investors are going in and buying up bulk projects. But again, if you're trying to sell a condo in this market, you need to be very sharp with your pricing, have your home ready, and realize that if you are selling for maybe a little bit lower than what you are, usually people are selling a condo to upsize in the market. There is relatively stableness in those other areas. So if you have to sell for a little bit less, hopefully you can go out and negotiate a stronger price, a lower price, on that next property. But again, the condo market is still in fluctuation, but it has stabilized overall versus those larger decreases where we were about 3-4 years ago. So talking about active listings in general, we've got a good graph here. This just talks about the total amount of active listings. This chart only goes back 2 years where we've been in relatively this flat market. But you can see we had relatively been under 3,800 listings for a while, and now we're starting to get up into that 4,100 type range with things trending up. And so again, you have to understand the more competition that comes on, the harder it's going to be for you to sell as buyers have more choice. And 2026, of course, as I've talked about before, is kind of the biggest renewal year from those people who bought in 2021 with those super low interest rates. So, hopefully once we get through the rest of 2021 and into early 2027, any of those people that are kind of being forced to sell because they bought at a really low interest rate and now are facing the higher increase of costs when they get into those mortgage renewals, it's important to know that hopefully some of that inventory will slow down. But again, as the economy continues to be sluggish, cost of living, all those other challenges that we're facing, we may see more inventory continue to trickle on. And like I was just saying at the beginning, even though sales have increased, as we can see with this line down here, which is total new listings, which is the bar graph versus the amount of sales, even with the seasonal pickup in activity, you can see new listings are outperforming the amount of sales. If we looked back at this chart back in 2021 when the market was really hot, this line graph would have been much closer to up here. So all the new listings that were coming on were being absorbed by a more fast-paced market. So again, even though activity is picking up, new listing inventories continue to build as we go along. And I wanted to break down that information a little bit further to look at the individual property type. So again, this chart's nice because it goes back 5 years. This is looking at single family homes. And if we go back to the peak of those COVID markets, 2021, you can see how low, like we got down to probably 230, 240 single family home listings being available. And now we're getting close to almost 1,600. So again, even though the single family home market has been stable, we're dealing with 8 times the amount of active available inventory. So this is why prices aren't going up substantially, and why, again, you may face more competition, and you may only get a few people who come look, and then they're going to move on to the next property if your home isn't the right fit for them. And this is really exemplified across all the different markets. This is the condo market. So again, when we had about 450, almost 500 active condo listings back at the peak of the market, we're now getting closer to 1,100 listings. So about 2.5 times the amount of condo listings available, again, with a lower buyer pool to search. And even in the townhouse segment, we are seeing about 4 times the amount of available inventory than where we were in 2021. Now, some of this is due to the surplus and surge of new townhome construction with the missing middle and Bill 44 regulations in BC. You can see it's plateaued here a little bit, which is a good sign that more of that, the bigger townhouse activity that we're seeing, we are seeing that get absorbed by more demand in that segment. But again, if you're trying to sell your townhome, you have to realize there's 4 times the amount of competition now than if you were selling, even in that, kind of 2022 when interest rates were starting to rise, we're about double the amount of active inventory that was there. So again, really something that we need to pay attention to when you're going to list. And if you're a buyer, you understand that you have more choice. But again, as I've said before, if you are a buyer, if the right property comes on and it's priced well, it's a great location, it's great value, it can still sell within a day or two. As an example, I just listed a great house up in Shawnigan Lake. Well priced, well staged. The owner's done a lot of great maintenance. We have an accepted offer now, and we got that really the second day on the market. And so, we can still get good activity on a property, presenting it well to the market, but it's also about pricing that property well. And I had a good conversation with that seller, and we're actually listed about $45,000 below her tax assessment. But she was understanding that tax assessment doesn't always correlate to value. and we price that home accordingly based upon the current comparable sales that have been happening in that neighborhood, and we've gotten a great result so far. So fingers crossed, of course, that conditions go through. But again, it's just a really good sign that, you know, if you price your home properly, you can still have success in this market, but the price that is proper may not be what you had originally hoped for. But if you do want to realize a sale in this market, we do have to kind of work through that. And some of the links that I'm going to include in this, you know, general topical news and everything else. One of them talks about all the new rental construction that's coming forward in the UVic area, which I think is great. Of course, we always had student housing challenges. And I think, you know, there was always this emphasis that people rented their condos, and that, you know, when there was not enough, rents kept going up and up. You know, we brought in the speculation tax, we brought in different rules to mitigate that and hopefully get more rentals. But seeing the development of rentals is what's causing the development of rentals, and also something else I want to talk about is what's causing rents to finally start coming down a little bit. So seeing a massive surplus of rentals coming in the market is going to help bring rents down, make it a little bit more affordable for students and people looking for a solid rental. But one of the other things, I've maybe briefly touched on this in previous videos, is we have to understand that with the federal government's changes in immigration, you know, we were seeing 1 million to 2 million people a year coming into Canada, new immigrants. And maybe a lot of those would settle in Vancouver and Toronto, but there was spillover. There was spillover into Victoria as well, or people that were finding Vancouver and Toronto getting too busy, they'd be moving over to Victoria and some of those other medium markets. And so with you know, 1 million people less coming into the country right now that are in that buyer and rental pool, that's also creating less demand for rentals and less demand in the condo market and more of that attainable price point as well. So, you know, not only has supply increased on the rental side, but demand has also come down quite a bit too. And so that's why I think we're seeing a twofold reaction in bringing rents down, which is good for the average person. And, you know, with a lot of those rentals being the big institutions, you know, they can weather the storm of rents coming down a little bit based upon their pro formas and everything else. And so just something really to be cognizant of. I've talked about it before too with, you know, where are our buyer demographics coming from? Obviously, we used to get a lot of people from Vancouver, Toronto, some of the other Canadian cities. Those people are still coming, but they're very selective right now. And as I've said before, the challenges they're facing in the Vancouver and Toronto markets means they might not be able to move here as quick, or because they have to sell for a lot less than they were expecting, their budgets and their price points may have changed as well. So, you know, I'm really hoping that our federal government can continue to create incentives and build the economy by, you know, incentivizing a resource sector, you know, bringing investment back. And that's one of the challenges I think we see in BC right now, is that with all the taxes and all the regulations and stuff like that, it's driving away businesses. And this is, if you look at a lot of economic reports, you know, investment in BC especially is starting to really slow down. We're losing a lot of our tech companies. This is happening across Canada as well. So we really have to realize that if we don't find a way to grow our businesses and our entrepreneurs and our small businesses here, those people are going to leave for other countries and other regions, and it's going to continue to cause the real estate market to be sluggish if we don't keep pushing forward. And this is also evident not just on the immigration side, but Canada last year saw its first decline in population growth, and BC was one of the big bulk provinces for that. So, I mean, everyone always said BC is just going to continue to grow and grow, and Canada is going to continue to grow and grow. Well, if we're not doing the right things with our economy and our jobs and everything else, we're going to continue to drive people away. And these are our young, bright minds. These are entrepreneurs. These are our doctors and nurses and engineers and everything else. So, again, if you're wondering why we're not seeing as much demand in some of these areas, it's a big, complicated, convoluted issue. But I don't think we can just keep blaming the United States and some of the challenges we're facing with them. We as Canada really need to take a step forward here and make this a priority, or it's going to continue to cause the real estate market to be challenged as we go through. One of the other announcements was it looks like there is a peace deal being ratified in Iran. This will hopefully help take the pressure off of inflation, and the bond yields are already starting to dip, which should start bringing fixed interest rates down a little bit as they have been increasing the last few months. So I think the Bank of Canada will probably continue to keep the rate hold flat. There is a sluggish economy here. Some people are hoping for a rate cut to make things a little bit more attainable and affordable, but the government's going to have to offset that with a lot of the government spending that's happening, and we're still seeing inflation in some other categories too. So it's going to continue to be a very interesting year. Most economists and stuff that I'm reading are seeing really maybe the middle of 2027, maybe late 2027 is when we can maybe see things start to pick up again. So if you are hopeful that the war peace treaty will just all of a sudden bring a bunch of new buyers, I really don't think that's the case. I think buyers are going to continue to remain cautious. They're going to wait on the sidelines. If the right property comes up, they may jump on it. But again, there's not a lot of motivation with a lot of different things going on. So you need to understand where you are, what your strategy is, and what are your main goals of buying or selling right now. So I'll leave it at that. We're going to have some other great listings of stuff included in this email as well, but I wanted to make this a little bit shorter and tighter, and at 16 minutes, I've done a good job. So hope you find that information useful. If there's anything you'd like to specifically talk about, I would love to sit down with you, chat about your property or what your buying intentions are. And of course, the majority of our business is built off referral, and we're always so grateful to our clients for the recommendation to their friends and family. So if you know someone thinking of buying or selling, I would love to talk to them. So anyway, hope you have the great rest of June, and looking forward to seeing you all in July. Take care and enjoy your summer.